Well, I fear that there's a lot of good news already in the price for some of those big tech names. If you look at the valuation of the growth stocks against value stocks today compared with what we saw in 2008, the gap between growth and value stocks has widened out really materially, so that the average growth stock is trading on a PE well over 20. Compare that with a PE that was down closer to 10 in 2008. So I think that even though some of those growth businesses are more resilient to this recession because of the nature of the recession with people working from home, they're probably not completely immune. You think of online advertising, online retail, for example. The market at the moment is focused on the fact that those businesses are getting a greater share of the pie, but not the fact that that pie is likely to be smaller overall, given higher unemployment. And therefore, I think with a lot of good news already in the valuations, that there is a potential risk to some of those names.
The value growth argument is a fascinating one, but it's one we've sat around this desk and conjured with for years, it feels like, and it's made no difference. The fact that at times we've seen the gap between relative valuation for growth or value has been very stretched. Why should it begin to matter now?
I think that is the difficult question, the timing of it. Historically, what we know is that once the valuation gap gets very stretched, there is a risk that you see what is sometimes quite a sharp and sudden snapback in favor of value, at least on a relative basis. But historically, some of the kind of macroeconomic indicators that have helped that pick up in value have been, if you see interest rates rising, which help the financials, and that seems unlikely in the near term, but also a bounce in commodity prices. So I think that we may need to see commodity prices move higher before parts of the value index start to outperform. And given that interest rates are likely to remain lower, perhaps a more selective approach within value makes sense. And I think the other thing is it's very important to be avoiding the value traps, because what's clear is that there are some cheap businesses that are cheap for a reason at the moment, because there's a risk that they don't make it through this recession. So I'm not advocating for all value, more just that some of those growth stocks have already got a lot of good news in the price.